Here, JB here. Hope everyone's doing outstanding. Thursday, October 30th, 9:15 a.m. on this fine morning. Talk quick about the market. Some names I'm looking at go from their S&P. Slightly in the red here, actually. Let's see where we are now. Oh, down about 0.4% off the highs. At 8 o'clock, we were about 687 and change. So pretty much flat. And then just a little pull here. Happy post-Fed day for those who celebrate. Joking aside. So yesterday, obviously the Fed meeting, markets kind of chopped around right at all-time highs, right into the Fed meeting at 2 o'clock. Then the Fed statement came out, and it was as expected, right? 0.25% rate cut. No surprises there. There was the dissenters, right? So you had Stephen Miran, however you pronounce it. He dissented, wanted a 0.5% rate cut, and then there was another dissenter who wanted no rate cut whatsoever. But the 0.25% rate cut came as expected, and the market, it was almost like a non-event. If you didn't know that the Fed meeting and Fed statement was at 2 o'clock, you would have thought nothing happened. The market just chopped around. And then 2:30 came, and Powell came on, did his same spin, normal, full employment, 2% inflation, his mandates, the dual mandate, mumbo jumbo, and then everything was good. Then the Q&A started, and it was like the second question came up about the December rate cut, and he said, "No, that's not a certainty. If anything, it's far from a certainty." Some to that word. Of course, I had the quote, and I lost the quote. Uh, so that right off the bat, the market stumbled, and in the context of previous moves post on during a Fed day, it actually wasn't that big a move. SPY all the way it was 688 and change. Actually, we might have been 689. Let's see where we were. Sorry, I'm just trying to pull it up here. So yeah, 688.50, and then within about 10 minutes, we are down to 682.87. Markets found some footing, and then we started to bounce, and then the spike was able to recoup the losses, close flat, and Nasdaq was up 0.5%. So nothing crazy, right? Now, to me, I think the Fed's still going to cut rates in December. I actually think it's a good thing that he kind of left, didn't sound overly dovish, right? And I think you don't want to ever have a situation where it's like you worry that the Fed is almost like inflating the supposed bubble, and there's a lot of bubble talk. To me, I like he's somewhat, just somewhat cautious, right? And some of the times you see companies who have cautious guidance, even though they should be optimistic, and those companies typically do well because their expectations aren't so high that when the company reports earnings, a beat, stock rallies. So I kind of look at it in that scenario. So I think that was all good stuff. Markets held their ground, and then overnight you had the China President Xi meeting, Trump and China finally. And that meeting went kind of as expected, right? You figured he was going to come out with some positive comments, right? He said the meeting was a 12 on a scale of 1 to 10. China talked about buying soybeans and possibly removing some of the restrictions on their rare earth exports. So, and then it was kind of like a truce. But, the thing with the truce, though, means that we're going to get some more tweets at some point from POTUS. Just that's almost like a certainty. So we'll see how that all plays out. But all good stuff. And then after the close yesterday, two earnings, right? I keep forgetting. So Meta, Microsoft, and sorry about that, folks. Meta, Microsoft, and Google reported earnings. So monster quarter. Google, another monster quarter, back to back. I mean, they all seem to be monster with Google, and there was always a concern that AI was going to kill them. Turns out AI is actually a boon for Google. So monster report there. Same with Microsoft. Microsoft, it always seems like they report a monster report, and then the stock sells off and then bounces. Got some of the bounce already here this morning. It's still in the red. The outlier there was Meta. Meta actually reported a strong quarter. There was surprise like $15 billion hit to their revenues or something because of the new tax code with that Trump ran in with his great big beautiful tax bill. And then there was also concerns, and the concerns it always seems to be with Meta was the capex. And I was talking about on the rant yesterday afternoon. Meta kind of set the ball rolling with the capex, and I remember the first time they surprised the markets with this huge capex spend. The stock sold off, and I don't know if that was 2 years ago. I forget when it was, but obviously the stock's been on a tear ever since then. The thing with Meta, it's like it's hard for them to give a clear, concise answer on the return on investment. I think Zuckerberg came on and he didn't say much in regards to, okay, what's going to be the ROI on this capex spend? And it kind of like sounded like he said, if demand comes down, we'll just put it into some other area to meet compute demand or some kind of I don't know. So I think that's some of the concern there. I mean, some of these names have been up so much. It's just some of that's just a function of their rally. But we'll see today after the close. We have Amazon, Apple, big reports there. Amazon's the last kind of like capex spend name to report. And the difference between Meta and Amazon is Amazon has the cloud, right? Monster cloud business where Meta is really not paying for cloud. So like, I guess that's the question marks around to their CapEx spend. If you take a look at Google, Google raised their CapEx spend, I think, to 93 billion. Their last update, I think it was back in August, was 85 billion. At the start of the year, it's 75 billion. So you can see that trend in the CapEx spend. As long as that cycle continues to head higher, I think that kind of appeases the markets. But we'll see how today plays out. I talked about a watch list yesterday too, 685. That looks like a key spot. Well, down here at 683 and change on the SPY. The lows yesterday was 682 and change, so probably don't want to see that breach at the open. We'll see if that finds support. And then on the flip side, I think 690 before the end of the week. I keep saying, I've been saying this for weeks. That one of these days, one of these earnings, one of these, will be the start of some kind of pull. I don't, I can't rule out if it's today, tomorrow, next week, but I'm certainly going to be in some kind of put hedge if when that happens. So, I'm not saying 690 on the SPY is a certainty by the end of the week. We could be at 670, right? I just got to be open to those possibilities. All right, so that's kind of the overall markets. Also of note, I keep talking about this market breadth or lack of bad breadth, but the amount of stock trading over their 50-day moving average continues to trend lower, another 13%. Well, not 13, but another 8 names under their 50-day moving average yesterday. Not anything crazy, and it's still not at the lows at the start of October. So, but just something I'm watching. All right, so that's kind of the overall market. So now just quick on individual names. First, Lemonade, right? And Lemonade was actually looking good in the earlier. It was actually 63 and change in the overnight hours. But always a name that I have on watch, especially since the end of last year for the squeeze. I think it was $28 at the end of last year. Why don't I have it here? Okay. So, it has a big short interest, a divisive name. Some people think it's a business that's not going to, do well. And some other think it's just on the verge of being this monster growth story. And it has been a monster growth story, and it probably is continue. So I'm in in that viewpoint that I think it's $100, $200, $300 stock. And maybe it's this year, maybe, well, not this year. Maybe it's the start of next year. So on and so forth. But to me, that means there's opportunity when the stock is kind of not trading up there. And when I start to see it move like it did yesterday, early afternoon, it's 59. Then it looks like it's going to break 60. You look at 52-week high, $62. So I went and got some lotto calls. Sure enough, within an hour, it went from 59 and change all the way up to 62 and change, almost up to 63. Used the move to close some of the calls out for 100%, some more out for close to 200%. And then I held the rest. And then sure enough, got fizzled into the close, still closed at near 61, but then just now looks like we pulled off the highs. It was 63.50 overnight. Just disappointing. So I still have some lottos. I'll continue to hold those. I put it on the watch list. Well, I did, the old watch list that kind of raised. If it gets over 62, I might look for some more lottos into next week to play with that squeeze. At some point, this goes on a tear, and I'm not going to sit and try and time it, right? So the plan would be to be in it when it does happen. So I'll keep looking at opportunities to trade that one for upside. And then yesterday morning, still looking to play Reddit for earnings, try to get some premium bill, got the calls. It dipped down to 204 after the open yesterday and then started to bounce. I was looking at the 290s, and then I'm like, oh, wow, 280s are less expensive. Got those. It was actually up nearly 40-50% into the Fed statement, and it was actually doing well. And then at 230, we got the move on Powell. Start breaking 210. I was still in the green. I'm like, I don't want to be in a spot where this dips under $200 if we have some crazy sell-off. So I locked them in for a small gain. I was hoping to be able to re-enter into the end of the day. I didn't didn't get a chance to do that. Maybe this morning I'll be able to get a chance. I don't want to try and time this or premium build into the afternoon. So if I do get some calls, it's premium build. Maybe the 270s will come down in price. I'll get some of those into the afternoon. Premiums go up, locks them in to cover costs, ride the rest into earnings. If not, I'll sit on my hands. I think I put this on a watch list again. Unfortunately, I don't have the watches, but I think it trades 260 on a strong beat and raise, because I think there's a lot of folks who are concerned that the change in the citation change that ChatGPT and some of these other AI models are using, the citation lowering the amount they use Reddit as a source is going to impact their numbers. I don't think that's going to be the case. If anything, I think their business is doing even better. I think it trades 260 plus. So also there was that report a couple weeks ago that they're looking to rework some of these deals with some of these services. So I think that could be a boon for them. But I think it trades 260 plus. Inline numbers, maybe it trades 220. A miss, maybe down to 180, and it'll be an opportunity. To me, the risk reward is tough, right? So if you get the 260 strikes, they're expensive. Obviously they'd probably be in the green tomorrow. But the 260s are $3. I just not the type of risk reward I do on a pretty much a lotto. So I'll I'll try and trade some premium build. If I can't, I'll wait for tomorrow. And then Dell, you know, ran into the green at the open, just couldn't get going, started to go into the red. Didn't want to lose the profits on the last of my calls, so I closed those out. Sure enough, came right to support resistance. Still a name I think is going to break out over 170 at some point, and then over its all-time high 175. So don't be surprised I have more strikes there. I was looking at super micro too. Thankfully, I passed on both of those, but I'll continue to look for opportunities there. And then later in the day, I got the Adobe puts. And, you know, I was talking about Adobe a couple months ago in regards to a name that I think is totally missed the boat with AI, and I think at some point it's gonna pay the price, and some of it already has. I mean, stock's well off its all-time highs, but I think there's more downside possible, especially if it breaks 330. I think 327 is its 52-week low. It breaks under that, I'll look for more strikes there. And then other names. So Amazon after the close, the biggest cloud, AWS, biggest cloud provider. So when they report, typically MDB gets some kind of swings. Um, not the most inexpensive name to trade for lottos, but I might look for some calls for a sympathy move into Amazon's earnings after close. The thing last quarter, Amazon reported what I thought was a great quarter with web services, but the market didn't think so, right? So maybe this is the quarter. The thing with MDB, the calls are pricey all the way up into the 360s. The stock is 340. So if premiums come out, I may look for some lottos there. And then last but not least on the gold trade, right? I sorry, we got 4 minutes to the open. Sorry about that. I have two phrases that I've been using, and you know, the new one is the great unwind, and I think that's going to be in regards to gold. So I'll have more about that on the rant later this afternoon. But I'm still holding GLL calls. I'll hold my dust calls. Already locked some in for freebies on the 13s. I'll continue to look for opportunities to take some profits. Let's have a great day. I'll be back on audio later. Rock and roll.